Look at that, guys, just absolute destruction. Now, we already went on there and we ran out of camera here for you guys so you can see how big this stalled construction is. Look at this. Hotel permanently closed, private property. Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. I got something very special for you guys planned today as we take a look at the commercial real estate foreclosure meltdown that's happening across the nation. And so what I'll do today, guys, is go over statistics as to what exactly is going on across the nation. And I'm also gonna go around the Houston area and I'm gonna show you guys several large commercial properties that are actually in distress right now. Now, as you guys know, on a nationwide average, and especially in Texas, foreclosures on commercial real estate is up triple digits. And so today, you guys, I'm gonna take you to several different types of property that are in different types of hardship. The first place I'm gonna take you is to a skyscraper that has stopped construction. Now, stopping construction in the middle of a project, in my opinion, you guys, that is a leading indicator to market collapse. Now, after that, I'm gonna take you guys to a property that's in foreclosure, that's an office. And after that, I'm gonna take you guys to a property that has already been foreclosed on, which is a Hilton hotel, and we're gonna take a look at that. They're in the process of actually converting that to an apartment complex. But my thing is, guys, is that may not be okay because we're gonna end today by taking a look at an apartment complex or multifamily property that is also facing foreclosure. Now, when I'm taking you to these properties, I want you guys to do me a favor, okay? And really think about this, okay? And I want you to ask yourself this question. What impacts are all of these massive developments and massive distressed properties going to have on the localized community? I've taken you guys to downtown Houston Museum District, and I'm gonna do this next part, and actually a few parts a little bit special. I have my oldest son, Wyatt, here with us. So what he's gonna do, guys, is he's gonna read an article and kind of just quote the stats, and I'm gonna hold the camera, kind of give you guys hopefully some entertaining scenes, but we're gonna rely on my oldest son, Wyatt, to get us started. So he's gonna be reading an article from The Real Deal regarding commercial foreclosures.
Distress reared its head in Texas last year and foreclosures are skyrocketing. In March, commercial foreclosures in state increased by 129% year over year and 31% from previous months. This now reported citing property data company Atom Data Solutions. California, New York, and Florida were the only states with more foreclosures last month. Commercial foreclosures in Texas totaled 55 last month, following 42 in February and 56 in January. Nationwide, there were 625 in March, up 170% year over year and 16% month over month. There has been a gradual uptick in commercial foreclosures since spring 2020, when pandemic-related moratoriums, which financially safeguarded property. But with these measures now largely unavailable, landlords are facing a harsh reality. Foreclosures and other signs of distress have been especially apparent in the office sector, which continues to get hammered by remote work movement that's driving up vacancies and available sublease space to historic highs. Foreclosures are on the rise across all asset classes, though.
All right, guys, let Wyatt know how he did below. I appreciate that, Wyatt. You know, and let's ask ourselves, you know, what did we learn and what is the lesson from what we just read? Now, obviously, it's a nationwide problem. There's a huge problem brewing in the financing and banking sector. The amount of money that the banks are losing from all of this foreclosures and everything that's happening as a result of quantitative tightening, I mean, it's definitely making an impact right now. Quantitative tightening is already working in commercial real estate. I'm gonna take you guys to a skyscraper project right down the street in downtown Houston that has completely stopped construction. And this is a massive $100 million project, middle of downtown Museum District. It is an eyesore. Everything has stopped. Let's go. We parked. We're gonna make our way to the skyscraper. And Wyatt's gonna read an article from Hoodline. And what we're gonna try to do, you guys, let me show you where it is. We're gonna try to make our way up there. So that's what we're about to go visit right there and talk about. And apparently that's stalled construction. Wyatt's gonna give you the details here in a second. And again, the reason really why I want to walk to it, shark bite. Reason why I really want to walk to it is see if, did they start construction? Because by now, what they're saying is they would have supposed to have started construction, so we'll figure that out. Again, I'm saying when you stall projects like this in the middle of construction, downtown, doing luxury apartments, that's a leading indicator to what's really going on. And also, it demonstrates that quantitative, more than likely, again, this is just one building, but this is going around the nation, so quantitative tightening is working. Wyatt, to you.
Houston skyline was set for a shakeup with ex-Houston high-rise in the museum district, but those looking skyward for progress have been met with silence. The ambitious $107 million 33-story tower aimed at being a modern co-living space has seen its construction come to an abrupt halt, leaving the structure at 5501 LaBranch Street in limbo. According to The Real Deal, Chicago-based X company pumped the brakes on the project, which spans 750,000 square feet and was poised to become one of the first of its kind for Houston residents. Even taking a stroll past the skeleton of ex-Houston now, a local curiosity, it's unclear whether or if construction crews will be back. The Chicago-based developer has also hit pause on similar projects in Phoenix and Tampa, amplifying concerns among industry watchers. Contractors have indicated signs of revival with talk of work possibly resuming in June. Quote, "We've been walking the job regularly and it looks good," end quote. Hoare Construction Senior Vice President Brady Johnson assured in a Houston Chronicle interview, despite the delays, ex-Houston could still escalate to its anticipated peak, providing 646 beds across 475 units, exemplifying a co-living concept that leans more towards luxury than mere affordability. Notably, financial woes seem to shadow the project. Contractors have been staking claims to unpaid work, with liens filed in excess of $67 million, as per Harris County deed records. The general contractor, Hoare Construction, is working closely with XCO to get the project restarted. The Real Deal says, amidst reports of the company itself filing for about $38 million in liens. However, Johnson remains optimistic, mentioning that they are really close to financing those arrangements.
We're just about here. Let Wyatt know how he did. There is the building, and I'm gonna tell you guys right now, I don't see any signs of construction at all. I see no movement. I see no workers. You know, you would think you would see, maybe we can see one or, you know, at least one crew up there, but there's nothing up there. I'm not surprised because this developer has failures in multiple states and in multiple projects. So why would they have started construction here when they're literally defaulting on hundreds of millions of dollars? And the type of impact that this is gonna have in this stalled construction is basically the loss of jobs. Anyone that relocated here to Houston to work here or to live here, those plans are ruined. And also, guys, a loss of tax revenue for the state. So then ask, where are they gonna get the money from? They're gonna tax somewhere else. Take a look here, guys, this is crazy. Ghost town, no one, no workers. That's crazy. I mean, seriously, guys, I mean, let me just go around here. There's gotta be at least one worker here. Looks like there's the construction office, elevator. I don't see no one. I see absolutely no one. And look at, I mean, I'm gonna tilt the camera here for you guys so you can see how big this stalled construction is. Look at this. Nothing, guys. I mean, why would they start construction when, again, it sounds like some or all of their projects are in default? What lender is gonna wanna do that? I mean, look at, guys, there's nothing. No construction, despite the false promises. These companies, they don't care about us, the workers. You know, they're talking about luxury apartments where, you know, affordability is not an issue, but even them, it's so unaffordable. The housing market's so unaffordable that they themselves cannot complete this projects, and it's only 2024, y'all. This gets worse. Everything you saw right here gets way worse in 2025. So what we're gonna do now, guys, is we're gonna pack it up. I'm gonna show you a massive commercial office building that's in foreclosure right now. But again, you know, just this building, you guys, I mean, it's in the middle of the museum district. The impacts here to this community is overwhelming, absolutely overwhelming. Now we're at the office building that is facing foreclosure and bankruptcy. And the story, guys, on this one, the story involves racketeering, bribery, fraud, postponement. And you know, I sit back as a normal, regular citizen consumer and I ask, like, how are these guys literally getting away with this when I can't even do a rolling stop at a stop sign without getting popped with a ticket? I'm gonna have Wyatt read you guys the story from Real Deal. Again, you guys, it's really, really astonishing to me that these guys that are doing these types of loans can get away with these things. One of the primary reasons, and let me turn this for you guys. Now, one of the primary reasons they can get away with all of this is it's a non-recourse type of loan. So the bank, really, their only option is to take away the property. So either way, guys, I'm gonna get some more shots of this building, but let's go back to Wyatt and have him read the story.
The embattled Houston-based developer has so far invaded foreclosure of 1001 West Loop South, the former Xerox building they own and has his office. Toronto-based lender Romspin filed its last foreclosure notice on May 30th. The auction is scheduled for July 2nd. The lender claims they defaulted on an $18.5 million mortgage dated September 2019. Romspin has been attempting to foreclose on this property for more than a year. The lender unsuccessfully filed for foreclosure the time in May 2023. It filed again in June, then again this past February. So far, the entities related to him and his company, Jettle Capital, has stopped these attempts with various legal maneuvers. The property at 1001 West Loop South is a Class B office building that was built in 1979. It spans 255,000 square feet. This is just one of the ongoing legal battles that the developer is facing. In October 2023, he was accused of fraud, racketeering, bribery, and theft in a federal lawsuit related to 829 Yale Street.
You guys see what I'm saying? I mean, what the heck? How is it possible that this guy can continue to extend like this? And then how about the theme of what's going on right now? Another developer that is failing on multiple fronts, multiple projects, multiple states, and they just get away with it. And guys, again, this is a massive property. I'm walking up to the entrance right here just to see what's gonna happen. But imagine the lender, a bank owns this. And if we do bailouts, guys, we gotta pay for this guy's mistakes. We do, if they do a bailout. That's why the bailouts are so bad. But I mean, I'm surprised at the structure, actually. This is not the structure that I was expecting. This is a huge, huge property. A lot of games are able to be played with commercial real estate. Doesn't look like, you know, the best upkeep. Take a look, guys. You know, pretty cool as far as the entryway. I mean, this is not a small property. This is gonna cost the community, obviously, jobs, tax revenue, more pressure on, you know, normal citizens that just wanna be left alone, that don't wanna be taxed to death. Now, again, the good thing about it is when a bank comes in to foreclose a property, and I'll turn this here so you guys can see it in a minute here, but a good thing about that is we can stop the bad guys that continue to make mistakes and continue to wreck us. We can stop them, and hopefully, like in this case here, they're taking advantage of some type of government or federal grant and program to do conversion. We don't want the properties to be abandoned. Now, I will say though, guys, I'm actually a little disappointed because you could see the property behind me and I expected to see some type of conversion going on, but it looks like, just like where we are coming from, there's nothing going on here. So let's let Wyatt read the story from Real Deal, and then I'm gonna kind of see if I can tour this little lot real quick without getting kicked out.
Hilton Houston Galleria to undergo $40 million apartment conversion. The vacant Hilton Houston Galleria is set to be repurposed into a multi-family complex by Los Angeles developer. The 13-story hotel has been empty since its lender foreclosed the property in 2022. The building's new owner, Brian King, plans to convert it into a multi-family complex. Dos Legos asset, owned by King, will renovate the 292-room hotel located at 6780 Southwest Freeway near Interstate 69. The project's estimated cost is $40 million and construction is set to begin in April. The anticipated completion date is September 2025, as Brandon Sams of The Real Deal reported. According to Rent Cafe, Houston ranks number 29 in office to apartment conversions nationwide. From 2021 to 2024, the number of projects converting offices into apartments has been more than quadruple across the country. This year, the U.S. will see approximately 55,300 new projects. Several projects have been announced and are currently in various stages of completion in Houston. The former Conoco and BP office building in Houston's energy corridor will transform into a residential complex and create 311 new units. The Houston Housing Authority is also collaborating with Columbia Residential in the conversion of Old Holiday Inn at 200 Memorial Drive into a 197-unit senior living complex.
Proud of that boy right there. So again, this is some good news. Now, what I noticed while Wyatt was reading that, I'm gonna try to walk up to the entrance here. You know, they're saying $40 million, but it looks like it's gonna take a lot more. And if the completion date is in September, I mean, it doesn't even look like they've started. I don't even see any like construction trash, like there's been a construction crew here. I'm gonna try to walk up, but I did notice actually across the way over here, let me see if I can show you guys, it looks like there's also mixed use right on that lot as well. So it looks like there's gonna be a little bit of competition. Again, you guys, I'm gonna see if I can walk up here real quick to give you guys kind of an idea of what this is gonna look like. But I mean, at least that they're doing something about it. Obviously, we want more affordable housing. This is in my eyes, kind of a positive step, doing and not allowing these to just sit here. Now, when we got here, the gate was opened. So take a look, guys. Here is the entrance. You guys see it here. They got some scalpel thing. Looks like maybe just a window cleaner, kind of just sitting there. And that's the entrance. Absolutely no construction crews here. Let me see what happens if I walk up here real quick and see if I can kind of peek in there. But again, I just don't see anything. Let's see if we kind of see. So it looks like there's a little bit. So you guys can see here, hotel permanently closed, private property, no trespassing, so we won't go in there, but it still looks like a hotel. We're gonna go to our final property, which is a multi-family apartment complex that is facing foreclosure. And I wonder, and this is kind of a rhetorical question, how many of those people renting those apartments know that the property owner is having to fight foreclosure right now? So that's gonna be our last stop. I've made it to our commercial multi-residential apartment complex, and I'll tell you guys, we've already driven back there, and it's way bigger than what it looks like. I just wanted to show you, come up to the sign so you guys know that I did drive all the way out here. But even commercial, multi-family, residential is not performing. And you guys are about to hear a story from Wyatt that's gonna say and show us and demonstrate this is going on everywhere. And I don't understand, you guys, take a look. So I am at Park North Apartments. And what I don't understand is even with this elevated rent, they still can't make this work. So, the fact that there are states, especially like Florida, with deflation and rent going down up to about double digits, this is gonna, what you see here is gonna happen a lot more. And I could tell you guys, there's probably, I don't know, 150, 200 cars here right now. Not a single resident that lives here understands what's going on. And who's to say that whoever owns this property next is not gonna raise the rent and potentially force people out? It happens all the time, especially with manufactured homes. Now, I don't think it would happen with an apartment complex, obviously, guys, but nevertheless, you don't know who your new landlord is gonna be. So either way, let me get back to Wyatt here in the truck.
Arbor Realty Trust is taking back another multifamily property in Houston, this time from Nashville-based investment firm. Arbor, a New York-based lender, has moved to foreclosure on the 372-unit Park North complex at 16112 North Freeway in North Houston, after an affiliate of Inman Equities defaulted on a $56.3 million loan. Bisnow reported. A foreclosure sale has been scheduled for June 4th. The Class B complex, built in 2008, has a taxable value of $54 million, according to the Harris Central Appraisal District. Inman has also been hit with several mechanic liens alleging non-payment for services including plumbing, pressure washing, window, and pool repair. This is Arbor's second foreclosure on Houston multifamily complex this quarter. Arbor sold the other in West Chase neighborhood to Walker and Company, providing a loan of more than $95 million to finance the purchase. However, allegations of fraud surfaced from short seller Viceroy Research regarding the sale, questioning the legitimacy of the transaction. In response to the allegations, Arbor assured that all details regarding the sale would be disclosed accurately.
All of these lenders that have loans on these properties, they can only handle so many hundreds of millions of dollars in losses. And I'm not even talking about unrealized losses. These are just like upfront in your faces. We realized we lost losses. Pretty much every property that we went to today also has mechanics liens filed on title. And if you guys know anything about liens, mechanic liens generally supersede any other lien on the property, and that mechanic can actually foreclose on a property. So it's just all the way around, you guys, this is just bad business. That if they're not paying their contractors, they're getting liens, every single one of these, I mean, it's not good. You guys starting to see what's happening here? And this is just a small piece of this pie. This is just a micro-sized portion of what's going on here. Let's conclude. In conclusion, here's what I think is gonna happen. I think we're gonna see, just like Melody Wright says all the time, we're gonna see bulldozers and we're gonna see cranes start absolutely wiping away all of these foreclosed homes, all of these foreclosed properties, these abandoned properties, and you see it happening again. Look it, right behind me. Now make no mistake, you guys, I gave you a very, very tiny piece of the pie. I showed you what's happening around Houston with multifamily, with office buildings. There's also warehouses that are abandoned in foreclosure. I wasn't able to get there. I showed you guys conversions that are not off the ground. I showed you guys suspended active construction that's not off the ground. Again, all of the things, all of this foolish and reckless optimism is gonna lead to exactly what you guys see behind me. And let me give you guys a better view of this. I mean, they are bulldozing that sucker down. Look at that, guys, just absolute destruction. Now, we already went on there and we got ran out. So I was curious to see if they're gonna run me out again, but look at that. It's just pure destruction. You guys are gonna start seeing this on a regular basis. You will see these cranes, you will see these bulldozers. Unlike the last 4 years with them building and creating things, they're now gonna start destroying things. And real quick, big shout out to Wyatt. I promised him if he joined me on this downtown extravaganza, if he read, that I would let him plug his clothing company. And let me show you guys real quick. Here's clothing company right there.
Navy Hill Arts.
So if you guys are interested, you want to show some love to my son, they do some really cool gear. It's going to be linked in my description. And other than that, guys, I hope you guys are really starting to understand what's going on. It's not all sunshine and rainbows and unicorns. There's a lot of bad things happening behind the scenes, and in fact, in front of our eyes. And it's starting, guys, with commercial real estate.